Hi everyone, this is Scott Carpenter with the Carpenter Group at Keller Williams, and I'm here today at Goodkind Coffee here in Lakewood, Ohio, with my partner in lending, Todd Liguzinski from American Pacific Mortgage. Hi Todd, how are you doing?
Good, nice. Thanks for having me today.
Awesome. Hey guys, I just thought I would start out today by first of all telling you a little bit about Goodkind Coffee, where we're sitting right now. Goodkind Coffee in this cute little setting right now here is a coffee shop that's been around for, not exactly how many years it is, but it's several years now here in Lakewood. They got started here on Madison Avenue in one half of the building on the first floor here. And then about a year and a half ago now, they expanded over on the second half of this, the second side of this building here on Madison, and opened it up so that they have even more space for folks here to come in, have coffee, and of course camp out for several hours doing work from home. So it's one of the cool spots in Lakewood that I like to go to. And in fact, every first and third Thursday of the month, I'm here for a coffee confessions event that I do at 8:30 in the morning. That's every first and third Thursday of the month. I come here to have coffee anyhow, so I thought I would start opening that up to folks and just let them know that what we're doing is, what we're doing in this industry. I like to pull back the curtain on how the industry works, and help people out with insights into how buying and selling in Northeast Ohio works. Some of the things that people might experience if you're a buyer or a seller. I like to anticipate that and help folks, get through that experience and do it in a way with confidence. So every first and third Thursday of the month, I share coffee with someone here, and we just sit down and have a cup of coffee, and I buy the coffee and they shoot the questions, and I help them out. So if you're interested in doing that, please come on down. It's 8:30 in the morning every first and third Thursday of the month here at Goodkind Coffee. Anyhow, with that, I just thought, we're just going to have a quick little round table here. Actually, not a quick little round table. I thought it would be fun to have Todd Liguzinski here from American Pacific Mortgage to just sit down and talk about a variety of issues, most of which are directly associated with the real estate world, but also some of the things that are impacting us in the real estate world that are happening out in the bigger world, and how it's impacting us in the real estate world in terms of everything from finding clients to helping our clients buy or sell, and then ultimately close on a property. Obviously, most of the deals that we're dealing with have to have a lender involved. So I thought Todd would be a great person to have for this first little round table that we're doing here at Goodkind Coffee. So with that, Todd, I'm curious, what's happening right now in the real estate world?
So
in your world, in your section,
my
your
section,
part,
my little segment.
Your part of the real estate world, exactly.
It's funny. It's like, I've been doing this since '99, right? So like I've seen so many different cycles and different parts of this, right?
Yeah.
And
wait a minute, 99, that means you were what, 19?
I wish. That's crazy. 51 now, which is wild. But like my whole adult career, I've been in lending,
Yeah.
and, I'm from the greater Cleveland area. And, it's like, I remember when houses would be months on the market to get a great home. Like it would just sit, right? And people had opportunities to sit there and look at it, come back, look at it, come back. That was me.
Yep.
I mean, I looked at my house probably 6 or 7 times before I said yes.
Oh, wow.
And it was just normal, though. I mean, that was the normal cadence of it all.
Right.
And then now, I mean, it's wild how fast the process is. You know?
Yep.
The tempo of everything. And, it went from that to like, you got to make a decision on the spot and just stick with it.
Right.
To now, it's like, it's interesting, like, we were talking about this, like how things kind of shifted a point where people, they make the decision quick, but they also, after they make that decision, they do the research on the home, right? They get their inspections, they do everything. And now, like of recent, I mean, really, it feels like really in the past, like 3 or 4 months where it's really been noticeable, where people aren't afraid of like, hey, let's put on the brakes. if they see something, they're not just stuffing themselves into it because they're worried about this feeding frenzy that's out there.
Right. Right.
So like that's been like a really interesting part of everything, you know. And I think a lot of things are really, and to me, that's stabilization.
Yeah. So just to clarify, yeah, there used to be a time when a deal, you might get something under contract and it might close in 45 to 60 days.
Yeah.
And now it's expected that it's going to close in 30 days, for example.
From day one.
From day one, from the day and those are consecutive days. Those aren't business days, and so that is speed right there. That means that we have to typically close 15 days faster than we were used to. And a lot of this happened, as you said, in more recent times. I think COVID obviously did a lot to impact the frenetic nature of the business, and the need for speed, as it were. Maybe we should be pumping the brakes more and kind of slowing things down a little bit. But that's going to impact how we work. It's going to impact how this affects people's lives. Like the changes that are going to happen. Because obviously it might take a little longer to find your house. It might take a little longer to ultimately move in even. I'm just curious from the lender perspective though, it's a process, right? And there's only, it's going to take so long no matter what to get through that process. Can you tell me and share with our audience a little bit about what happens? So when I send you a contract, tell me a little bit more about what happens.
So the first thing is a conversation, right? Just like when you're buying a house and you find out what their needs are and their goals and things like that. And, we have that, it's almost like an interview, right? To make sure that we're putting them in the right loan, putting them in the right spot. And then, there's some tasks, right? After we find that, there's some tasks, and a lot of it's getting the information. It's like income information, asset information, all the documentation, if there's ever a bankruptcy, all the bankruptcy papers. Now there's some stuff we do with technology that helps expedite that. Like, we have a few different systems that we are able to get all their income information where you don't need to get their W-2s and pay stubs. And we could pull it down for like 60 days, 90 days afterwards, which makes things easier, right? Because that timeline, when you have to start chasing those things, it makes it a lot harder. So what we do is we try to get all their information up front and we get them underwritten out of the gate. So if we get them underwritten, this way, when they are going to start putting in offers and they start looking at houses, they're ready and they're not doing that scramble. A lot of people, things are easy, but when you start getting into more technical files, let's just say someone's self-employed and they haven't filed their taxes yet or things like that, there's other things that we can do alternate, but it's like some people just aren't really prepared with their documentation, and that could stall things. So now when you have someone going under contract, just trying to find the house and do the dance with that, with the home inspection, the appraisal, and all that. And when you have to pile on the documentation and getting them approved, it puts it a challenge. It really strains everybody, including them.
Well, but there's a process internally. So I'm thinking about a few things. Yes, I'm thinking about a few things, and one of those is that internally you have I consider it sort of a black box. I mean, basically, it's going to underwriting. And when something goes to underwriting, it kind of disappears. There's a black box there we should talk about. But in addition to that, going back to the very beginning of that conversation that you're having with people, and we do the same thing on the real estate side. We'd like to know where our people are financially, and sometimes. They'll start out with something like, well, I have a 770 on my score, and I should I've got good income and everything should be great. And I think there's an assumption that because they've got a 770, from Experian or whatever, that's all they need.
Right.
And But then when you guys start digging into it, you find out there's a whole bunch of other things. And quite honestly, it can be a little embarrassing for some people, right? Because they thought they were all set to go. So going back to the very beginning of the process, like that conversation that you're having, let's talk a little bit about that, because I want people to come away from this thinking like, okay, this might get a little uncomfortable, but it's important, and why?
Well, it's like anything, you want to be transparent, so things don't come up in the end. But like, score's a good one right there. It's like if you get, people get their free credit score, your Vantage score, you get something like with your bank, and all these things are, that's just a stripped down score. That's not your score when you apply for a mortgage and you apply for a car loan. Anything you apply for has a different scoring model because it's all weighted differently.
Okay.
So, that could be way thrown off. Or even when you're up in the upper sevens, usually it's not so far off, but it's when it's the lower scores, when it's 580 to 620, there could be a huge buffer in between there on that stripped down score when you're applying for a mortgage. And then, part of that initial conversation is it's not just, how financially are you, but then it's also the other things. A lot of times people are financially well, but then they're signers on accounts. They're a co-signer for a kid's car or for student loans or for someone else's mortgage. They help somebody out. I had a lady, it's crazy. She co-signed for her sister on a house. Her sister had an $800,000 home in New York that she co-signed for. She was trying to buy a $220,000 house in the Cleveland area. She was selling her house, had proceeds, but the sister needed her income to tip her over the top. And she was a nurse, so she had good, stable income and all that. But now that house that she owned in New York affected her. She owned that house. She's only owned it for 6 months. I mean, her story was crazy. Someone got shot in front of her house, and she just wanted to leave.
Oh, wow.
And it was just like, I'm leaving. I'm not, and there was nothing, she's like, I want to go now.
Yeah.
And that was her why. Like, everyone has different whys, right? And rightfully so.
But she had put her name on that loan.
Yep.
Okay.
And, you need a 12-month payment history of the sister making those payments to not count that.
On her own, right.
Yep.
Separate from hers, got it.
Yep.
Okay.
And that's just, one of those, an extreme, right? Because most people aren't doing that, but she was trying to help her sister out. And her sister had two options. It was either we have to wait 4 or 5 months for that 12-month payment to happen, or the other piece was the sister refinancing that property to get her off of it, and she didn't qualify income-wise.
Wow.
Wow. We had luckily her daughter lived with her. We put her daughter on the loan. We were able to do it, other ways.
Yeah.
And then her son was a non-occupant co-borrower, so this was like a 3-part family transaction to get it done, but it was able to get done, to meet the mom's needs.
Wow. Well, that's a pretty extreme.
It's extreme.
Yeah.
But going in, a lot of times, if she wasn't underwritten, a lot of the stuff wouldn't have gotten caught. So, granted, it's the extreme, but that extremes, they get under contract, they start short, because she had a good score, great job. You'd think that it's a slam dunk.
Right.
And it should have been, but there was these little things that kind of happen.
Right. Well,
So
that's not little, and when you're co-signing, I think everybody should know that when you're co-signing, you are taking on the responsibility of that loan. You have to obviously you have to qualify.
Yeah.
And then it's going to show up on your credit.
Yep.
As something. Now we're not talking about your credit score. We're talking about your credit, and it could have been a good thing in terms of your credit score that you were making a payment on a $800,000 place in New York City. But when you go to borrow more money or do something else with your money, it has to be considered. It can't be just
just as
swept under the rug.
Yeah, you're just as financially responsible as that other person. Yeah. So sometimes they think, well, I'm a co-signer. I'm not. It's like, no, you guys are equals.
Yeah, right. Exactly.
Exactly.
That's
why you're.
It's not my loan. But it really is. It really is. Technically speaking, it's really your loan, and I think that's and then there's just the like credit card debt. There's a credit card debt that can get in the way. You think you're making payments, but it's you got $10,000 of credit card debt. It's good in terms of building your credit.
Yep.
But then when you're looking at what you can actually afford to pay on a monthly basis, that's where the underwriting comes in and says, wait a minute. We've got to make this payment and this other payment. So talk a little bit about credit card debt and how that affects things.
So it's another monthly payment, right? And it all contributes. Now we have numbers that we kind of stay within. There's things that we do. We run something called findings that kind of give us the what we can and can't do. But underwriters digs deeper.
Right.
You know what I mean? They have extra tools, like, electronic tools, like, internet, everything's great for a lot of things, but it's access to information. Like, they have a lot different access than we have.
Right.
So they start finding things, and they're like forensic accountants, right? They go through things like, especially like undisclosed debt. Like, you comb through a bank statement and they'll find like, what's this payment to this creditor, even though it's not on credit.
Right.
And now all of a sudden, you got to start digging deep on that. And those are the little things like, hey, I'm helping my kid, I'm making his car payment. That can negatively affect you.
So just to be clear too, every lender is going to do this.
Yes, this isn't just
nobody's going to be able to get around. Nobody's going to get you around your personal debts.
Nope.
Nobody. That's all going to show up, and it's all got to be taken into consideration when you're being ultimately approved for a loan.
But that's why it's important to prepare. The word prepare is critical. It's not just, I want to buy a home and do it, and like don't put the cart before the horse.
Right.
Go ahead and make sure you know what you're qualified for. That's why the underwriter doing it, not a loan officer.
Right.
I miss things. You know what I mean? Like, personally, and I've been doing this a long time, but like, sometimes they find that one thing that could be catastrophic to the transaction.
Right.
Or, just some stuff they find out, like ex-wives, they're divorced, but they're not divorced. They don't talk to people. They don't talk to each other. They've talked to each other for a decade, but they never filed the paperwork.
Oh my gosh.
Well, you're still married, by the court of law.
Yeah.
Right. And Ohio's a dower state.
Right.
So
let's talk about that a little bit, because that's actually one of those things that a lot of people. I had a few clients lately that we had to go through that process.
Yep. So Ohio's a dower state where I don't need your permission to do something, your spouse, but being a dower state, you got to know what's going on. So there's documents that, that they have to sign legally. Ohio law doesn't, there's no ways around it.
Right.
So then, you have to track down this person, and it's hard.
You're separated and you haven't been together for a long time, and yet we're not divorced by the court, then that person has to be notified that you're purchasing a house. Or that you're selling a house. They have to be notified, and they have to sign off on it. And it has to be notarized. They have to be as if they had been to a closing or something. They have to have notarized that.
And especially when you're trying to sell, that's a touchy subject. Even if they haven't talked to them, and all of a sudden they think there's money. They know there's money there.
Yep.
And they're on title because they were in that happy place at one time. It's just, you just can't cut them out.
Right.
You know.
Well, let's go back to some positive experiences. So how are we doing on sound now? We're good? Okay.
Should be fine.
Okay. All right. So going back to again the process. Let's just assume we've got someone, we've got them pre-approved. One of the things that I like about working with you guys is that, and we've been talking a lot about the underwriters, is that we effectively do, I call it pre-underwriting.
Yep.
But why don't you explain that? Because before you do, I'll just say that one of the things I like about this process of sort of being pre-underwritten is that when I'm making an offer to somebody with my client, and I tell the other side, the seller, that we have a pre-underwritten offer here, their ears perk up, and even if they don't know what that means, their ears are going to perk up. And yet, when they do know what it means, if I'm able to explain it to them, or they've had some experience with it, it almost always is a positive for our buyer, because basically it's creating in the minds of the seller a certain amount of assurance that this person is going to be able to get this loan done. And a lot of times, we were talking earlier about the internet. People just go on the internet, they've got a score of 680, and they just assume they're going to get pre-approved, and so they go on the internet and they fill out some paperwork on some big box lending institution, and of course they get a letter that says they're going to get pre-approved. But then when we go to the finish line and we got to get the loan done, it doesn't happen because of all the things that we just talked about that could come up in the process. So talk a little bit about what that difference is in terms of pre-approval versus pre-underwriting.
So we actually take it through underwriting. When we go through that, all financial contingencies are made. So like Matt, so we know income-wise they qualify, what the underwriter is going to determine their income to be. Like income is tough. When if you make let's just call it $100,000 a year, and you've been making that same amount W-2 for the past 5 years, that's easy. But the tough part is when there's overtime, or like, nurses, or shift differential pay, there's overtime, there's all these different things. You could get 4 or 5 different people to look at income and I'll calculate it differently.
Yeah.
That's the tough part about our business,
Yep.
is it depends on who gets it. So now we got to fight our way through, if ours is higher, there's ways we deliver it, like some of my processors are ex-underwriters. So they know how to deliver the information to show them this is our calculation, this is the why, and try to, get them to understand it our way.
Right.
Because it almost becomes like a negotiation with them to get it. Because if you have to go top of budget, this is where it falls, and this is why that's really important. So we actually get them through underwriting, where the only thing that's going to matter is, did they change anything? Did they buy anything during this process, right? Or, did something just really weird just kind of happen? Because stuff pops up like tax liens.
Yeah, let's go back for a second, because I want to make sure people understand this. One of the big concerns I have whenever I start this process of helping somebody buy a property or buy a house or whatever, is that they continue to spend money the way that they were.
Yep.
And sometimes they can get out ahead of themselves. They can go to the Best Buy and get a credit card, or buy the lawnmower
furniture
that they think they're going to need for the new house, or some furniture that they're anticipating needing for the new house. And when someone's got a kind of a tight budget, that can really throw things off and stop the whole process, really, because they basically suddenly their pre-underwriting is no longer any good because they spent $2,000 on a couch.
Right.
So that sort of thing we have to be clear about with our clients, that I tell them immediately, like, whatever you do at this point, you're buying a house, nothing else. Let's just stick with buying the house.
Yep.
Because of what you just described. So let's go back though. So to pre-underwriting then, it's taking that person's finances all the way through, so that we also then establish, like, here is your range for what you can afford, given what we've just been through. So let's make sure we understand that a little bit.
Yeah, so like they're, and something, the good example is when you have, let's say you have 2 people and one person's self-employed, but we can't claim they don't claim all their income, right? And they make money, and you're trying to really hang their hat on the W-2 wage earner.
Oh yeah.
And they could afford it, but they just need that top number, right?
Okay.
So that's why it's like critical that what that top of budget number is. So when even though personally they know they could afford it, but on paper it's a whole different story, right? What an underwriter sees, what they have to look at, because again they have certain boxes that we got to fall within.
Right.
So it's why it's real critical when they're putting in the offer, we start factoring the taxes, the insurance, and all that stuff, that that offer could stick, right? With what they qualify for. And that's why it's important that, when the listing agent hears that they've already been underwritten, that they met financial contingencies, like, a lot of times I'll call that realtor up and let them know, hey, just want to let you know you were submitting an offer at 123 Main Street, and and you kind of give them, like, ask them, hey, do you have any questions? But these people are strong buyers, we have a loan commitment on them, they've done all their homework initially going on. Does it help every single time? No, but it does strengthen it.
Yeah, I mean, let's be clear about that too. What it's doing is it's letting the seller know that really at this point, all we have to worry about is the appraisal.
Yep.
The inspection and the appraisal, and that's it.
Yep.
We're not worried about getting to the finish line, and we're within 2 days of closing, 3 days of closing, and the whole deal gets blown up because the financing didn't quite come to where we needed to. So that I think is really, really a tremendous. And of course it's our job as realtors to make sure that the other side understands the value of that.
Yeah.
Sometimes they don't, and that's where a good realtor is going to be able to communicate that very, very clearly. And as you say, I mean, you and I have done this a number of times where we've had you make that phone call, or your LO make that phone call to the seller, so they understand this is where we're at. I mean, we just need you guys to get through inspections and the appraisal, and this is a closed deal.
And as a listing agent, when you have a property for sale, you get a bunch of offers. How do you pick one?
Oh,
it's hard. It's not just the top dollar.
Yeah, no.
Okay, the top dollar with all these contingencies, or top dollar from not, because I think it makes a difference if you have a local lender also. I think when
I
you
agree.
take online, if you take an online offer, I mean, that's all it is it's canned, right? Put in your score, put in this, it prints out a pre-approval. It's all automated.
Yeah.
And then getting someone local that knows the market, that kind of know what insurance is in the area, that know, what I mean? Like you see enough of them, you don't know, but you know. Like I know if a roof's over a certain period of time, within a certain dollar amount, the range within a couple $100 a year that it'll be.
Yeah. Yeah, exactly.
No, looking up the right tax information, not relying just on, because a lot of times they just rely on Zillow or, some other thing, real, like that's all self-reported. You know what I mean? Like a lot of times they don't take in homestead exemptions. Like you got to remove that a lot of times if there's one applied to that house.
Right.
And it's just knowing, because again, that could be another deal killer.
Yep.
They think the taxes are a little bit lower and they're not. Well, it's showing low. We got to add that back in.
Add that back in. Exactly.
But that's just time.
By the way, that's a good point too. Is that while you might have, like, for example, you might be approved for a $300,000 house, and that's like, let's just say that's the top of your limit. You're approved for $300,000, and the taxes have to be something like $4,000 to $6,000. But you found a $300,000 house that's got a $10,000 a year taxes on it. That can be something that could upset your deal because you don't have that much money to work with on that top number for your house.
And streets are different. You know what I mean? You could take that $300,000 home, like Lakewood's a good example. You take it on one street, another on another street, tax could be $1,000 swing for the same.
Be $2,000 or $3,000.
Yeah. So I mean, it's all every city has these things, right?
Yeah.
That's why it's like, again, accessibility, working with people that are always accessible.
Yeah.
Being able to run numbers when you're in a tight budget, you got to run those numbers.
Yeah, I think that's a really good point that we, I think over the last few years especially, our buyers have come with, for the most part, the middle of the road and the top buyers could afford to do what they wanted to do.
Yeah.
Right? I think now it feels like things are starting to get more balanced in the market generally, and one of the things that's coming into play right now is that we've got to be more attentive to all these details.
Yep.
It's not as if there's boatloads of money being thrown around anymore. It's getting tighter, and we've got buyers who are becoming much more selective.
Yep.
And a lot of it has to do with the price in relationship to the quality of the home that they're buying for that price, and taxes. When I say price, too, I'm thinking primarily of what is my monthly payment going to be.
Yeah.
It's not just I'm buying a $300,000 house. I'm buying a $300,000 house with a monthly payment of this.
Yep.
And I need and they're taking all of that into consideration in terms of value, the total value of the property. And I think that's something that we're going to see more of in this market, where it's becoming more and more balanced. And by the way, when I say balanced for our audience, it's been a seller's market. And,
Yep.
And while it still is somewhat predominantly throughout Northeast Ohio, it's becoming more and more balanced, meaning it's shifting towards a more balanced market, which means buyers and sellers have to do more negotiating.
Yeah.
And they have to be more reasonable,
Yeah.
right?
A lot of communication. I mean, that's what it comes
Yeah.
down to, is
Yeah.
getting, setting realistic expectations, right? On what this is, because when you're buying a payment, you have a payment of, let's call it $2,300, whatever the dollar amount is,
Yeah.
right? What you've been paying. A lot of people are paying more. Now, all of a sudden, you adjust your household household budget by $3,000-4,000 a month, or $4,000 a year. That takes things off your plate.
Oh, yeah.
So people, when they're looking at things, that's why the home inspection is critical. Like, do you have another $6,000 to replace that AC unit?
Right.
Do you have another $1,200 to replace that hot water tank? And I think communicating, like, that's part of that initial interview process. Like, the one thing I ask people, just because you have X amount of dollars in your bank, right, doesn't mean you want to part with it all. There's a reason why they're looking to buy right now. And granted, there's motivating factors. Rent could have been going up. They're just tired of it. But usually there's a cushion there, right? There's there's a sleep number that most people have that, like, hey, if I have this amount of money in the bank, I'm ready to do this. Most people aren't just buying, right? It's not. So, what are you comfortable parting with? And then they'll say, $3,000. There's no wrong answer, right?
Right.
It just gives us a framework of all right, maybe we have to go down payment assistance. Maybe we, you know what I mean? But like, being upfront with them and getting to understand, like, yeah, this could be a potential problem. It's going to cost you blank. May not be a problem today, but in the next 5 years, you're probably going to need this.
Yeah.
To, give them that understanding. And I don't think that happens enough.
Well, I think you brought up another good point, and you've said this a number of times already while we've been talking here, and that's communication. And I feel like we're going to do a little time check.
Yeah,
Sorry?
I'm just going to let you know. Like every 30 minutes, I'll let you know.
I'm sorry? I didn't hear you.
Every 30 minutes, I'll let you know.
Got it. Okay.
Okay.
All right, so let me, I'll just go back to what I was about to say. What was I going to say? Oh yeah, so one of the things I'm hearing as we're talking right now that is critical is communication. And I just want to re-emphasize that a little bit on this particular point because, again, when I'm looking at the market becoming more and more balanced, I'm feeling like communication is going to be absolutely critical for a number of different reasons. Number one, setting expectations. You said it, right? Setting expectations with our clients. The other aspect of communication is going to have to happen, that is definitely going to have to happen, is the communication between the parties. Mm-hmm. So one of the principles that I really espouse is, and I think is going to become more and more relevant, is win-win. Mm-hmm. In a market which is more balanced, we need to find the win-win, meaning you get some win and I get some win in this process. And the only way that's going to happen is going to be through some very candid, open communication between the parties.
Right.
One of the things that we talked about earlier, the black box of the underwriters. And we kind of have, for the longest time, we've always had this kind of us and them approach into the industry, meaning I'm going to keep all my secrets over here until you capitulate. I think more and more we're going to have to find creative ways to communicate each other's needs, so that when the buyer and the seller are actually negotiating, we're finding what is going to be helpful to each other.
Right.
So that we can ultimately create a win-win, and you get to sell your house to my client, and my client gets to have a smile on their face, and your client gets to have a smile on their face, right?
Yep.
How do you feel about where the market has been and where it's going in relationship to what I just said?
Well, I think it's weird because a lot of times it's like everyone's adversaries, right? They're against each other, and it doesn't make sense to me. You have someone that wants to sell a house, someone wants to buy a house. They think, lenders just sit on their hands and like they don't want to get this thing done. Like I'll tell you firsthand, like processors, they fight, they lose sleep over files. You know what I mean? Like they want to get it done. Underwriters want to get it done. The people that are like, loan officer assistants, like everyone is motivated. And it's funny because people don't sometimes think it is because, you get a document and they think that it should be cleared right away, or, it's like everyone does care in the transaction. Title reps, they care. Title companies notify us constantly. Hey, what's an update on this? What's an update on that? It's not because they don't care, right?
Right. No. They're trying to get the deal done. They're trying to help everybody get it done.
Because there's so many people don't realize what effort's behind it.
Oh, yeah.
Right. And I think when there's withholding of information, there's no communication. That's what all unravels. Yep. It's like there's no reason to hide something.
Right.
There's right now. There's just always stories. Right. Like this morning, an agent has a listing. And it was supposed to close tomorrow, and they just got notification that the lender told them like, hey, we're not going to be able to close. We got to switch down payment assistance programs. And I'm like, she asked me, she goes, well, what do you think? And I'm like, well, there's a problem with the loan. You know what I mean? Ask them, what's all right? You tell them that, and I loaded her lips. I go, what down payment assistance?
You let her know what to say. You mean?
Yeah.
Yeah. Right.
So I'm like, what down payment assistance was it? What was the hurdle? So, because now she has to communicate to the listing. The people that are selling the house, they have plans.
They have plans, right?
And that's the part everyone doesn't really, you get, you think it's only about one person. It's about everybody.
It's a domino.
It's everybody, because now the house they're buying is also going to, there's so many parts of it. So it just comes down to like, what's the reason, this, then, and it's like, they're just not communicating. They're hiding something.
You brought up a couple of other good points. number one, and I do want to come back to this, which is like first-time home buyers and down payment assistance and all of that. Let's definitely come back to that one. But the other one is that we've got deals where we've gotten so far into the deal, and something like the lending situation that you just described happens.
Yep.
And I've often said there are no emergencies in real estate, right? And the reason why there are no emergencies in real estate is because people are, in my opinion, the people who are communicating well are going to be able to handle whatever kind of emergency might pop up in this process, right? That said, there are sometimes, like as I said, I don't like to say that there's emergencies in this business, but there are emergencies, and I think that almost always it's related to something been kept secret. Somebody, didn't hold up their end because of a secret or something that they didn't disclose.
Yep.
That needed to be disclosed and was found out at the last minute. And so consequently, it's become kind of an emergency.
Right.
And it feels like that's kind of on the consumer, right? It's not. I mean, in our process, I'm just making it clear to the audience. 9 times out of 10, that's what it is. It's not because of a failure on the part of the the clients. I'm sorry, the
Agent,
the
listing
agent,
agent.
or the the brokerage or the title company.
Right.
It almost always hinges on somebody involved in the process.
Right.
I should say, one of the parties of the deal, having held something too close to their vest,
Yeah.
only to find out that it's making a big mess.
And it all gets caught. Everything gets found. There's no, and that's what the technology, right? It helps move things. It helps shrink those timelines, right? But also, the timeline of finding information, it's almost instant.
Yeah.
It's not, there's no lags. And the minute it pops, it pops.
Right.
And like tax liens are a great one, especially this time of year, they start showing up. And, they owed income tax and it's another state, and it's like, well, I haven't had to pay that. That was in the state of New York. I haven't lived there for 9 years. It's like, but you owed it when you left, right? You know what I mean? And it just showed up. Just because it's out of sight, out of mind doesn't mean.
And nobody was looking for it. Now
Correct.
Now you have an underwriter looking for it,
Yep.
and there it is.
Yep.
So.
And it's there, and you owe it. There's no ways around it.
Right.
So you have 2 options. You got to go on a payment plan, or you pay it all off.
Right.
You know what I mean?
Right.
But the payment plan, what do you think the tough part with that could potentially be?
It's going to affect your loan.
Yep, it's going to debt to income ratio. Now, all of a sudden,
Yeah.
your buying power, you go top of budget, and you got a $300 tax payment. It's going to affect everything.
Right.
So, it's not to hurt anybody, and it's ultimately, even as a buyer, sometimes they get frustrated, but it's there to protect them. Because the last thing you want them to do is get into a house and now all of a sudden, everything sounds great right now. You know what I mean? When you want something, you figure out a way. Like mentally, we train ourselves to figure out a way to make it. We think we're going to make it work until financially you can't do it anymore.
Right.
And that's what it is. It's to protect them, but sometimes it's not received that way. But that's all delivery. Just like when there's bad information, the listing agent, you could sit there and just spit flames. Oh my God, the lender this, the borrower this, and this, and blame everybody. Or you could take a calming approach, and those are the agents that always seem to be the most successful.
Yeah.
You know what I mean?
Yeah.
And just like, hey, this is what we're running into. It's not uncommon. It does happen.
Right.
You know what I mean? So we have 2 options, right? We could say no and not want to do an extension and start the process over, or, you know what I mean, give them a little bit more time. This doesn't seem like anything crazy.
Right. And I also take the approach almost on a regular basis, which is we have a bird in hand is worth 2 in a bush.
Yep.
And that's a good example where, if you can work things out in a deal, then do what you should do to work things out.
Absolutely.
Because otherwise, it's so costly, not just in dollars, but in aggravation and in time, the amount of time that you're going to go through. You found something, let's just make it work. I mean,
The mental bandwidth on starting over is not worth.
it's not worth it.
It's not worth it because you're another 30 days. I mean, what the needle is. It's 30 days minimum. Got to get another appraisal. 2 appraisers could appraise your house. It may not come at the same number.
Right.
You
Right.
know, people just think that like,
Oh my gosh, yeah, we got to definitely talk about that.
I mean, that-
we have to talk about that. Absolutely. But that's a good example too, though, where you, if you go back to, it's another 25, 30 days.
Yep.
You know, assuming that everything, we went through
Yep.
one recently with like this. You know, assuming everything is perfect, even, you know, you're looking at 20 to 30 days.
Yep.
To just to restart, and it starts with just on the lending side, you got to restart, and because the appraiser is going to come out, and that appraiser is going to say this is the value today.
Yep.
They're not saying it's good for 6 months.
Right.
They're telling you it's good for today. That's the value. On that basis is when the timer gets going on getting this thing done, because everybody's agreed this is the value of this property at this time. So that can throw things off a lot. And in a market where things are volatile,
Yep.
you don't know at any minute, any time, you know, suddenly it could dip, and you know, they're looking at the comps and they're going, but I can't come up with the comps that you had 30 days ago. It's 30 days old already.
Or new ones show up that might be something right down the street from you.
Yeah.
And that one alone, you know, let's say you had, I'm just going to use round numbers, right? Let's say you were having yours for 250, and there might be one that went for 200. It may be more of a distressed property, but because it's right down the road, guess what one of the comps are going to be?
It's going to end up being lower, period.
Yep, because underwriters, even though underwriters don't just underwrite the income and assets. They underwrite your appraisal. They look at that, and they look for the comps.
Right.
They look for all the same things. Like, I mean, they have a very broad perspective on the things that they look at.
Right.
So they're going to do then is they're going to ask the appraiser, hey, there's comp number blah, blah, blah at this address. Why didn't you use it?
Right.
And they could force them to use it. And a lot of times they do, because ultimately it's their job to protect the borrower.
Yeah, I think that's a good point too. We have a number of protections in this process, and it starts with, I think it always starts with that, you said it, the initial conversations that we're having with our clients, whether they're buying or selling, and then as you go through the process, once you have found something that you like, or that you love and you have to have, or that you're ready to sell, you've made that decision, and then there's all these other places along the route that really are mostly for the protection of the consumer. Let's be clear. If
But consumer is a broad word, because it not only preserves the consumer, though, it preserves the whole market, the career, right? It's not about the one loan and getting it through. Because it's like, let's say a lender's out there doing bad loans. We have '07 again.
Yep, exactly.
You know what I mean? So as much as we all get frustrated with it when it happens, you know what I mean? But it's their job to kind of protect our whole industry, right?
It is.
You know, when you look at more of a broad scope of it all.
Yeah, and let's be clear. When we talk about the industry, really, we are really talking about the market.
Yep.
We want a market that is let's look for the word here. That is a true representation of what's actually going on.
Yep.
And we know that in this world there's always noise.
Yep.
And the noise tends to be we react to the noise emotionally.
Yep.
And I wanted to get to this point because, when we're looking at these, whether it's the appraiser or the underwriters or even the inspectors, there has to be a certain amount of rational thinking going on in order for us to maintain credibility in the marketplace. Otherwise, it's very emotional, and if it was left to emotion, my God, we'd be buried.
It'd be ridiculous.
It would be ridiculous. We'd never be making enough money, by the way, to afford a home. But needless to say, I mean, because we always have sellers who are telling us their house is worth $600 when it's really only $300.
Right.
So we know that can happen, and that's all emotion.
Yep.
Right? So I think that's a really important point to make to anybody who's interested in this topic, is that there is a rational element involved here, and that's to the benefit of the consumer and the marketplace.
Yep.
And it's kind of scientific. It's not perfect. It isn't perfect, but it is about as close as you're going to get, so that we have a rational element kind of directing traffic in the marketplace. Wouldn't you agree?
Yeah, we all have. I mean, that's why there's guidelines, right? We all have to. There's guardrails on everything.
Yeah.
Now we could sometimes, go a little bit far to the left, right, but there's guardrails we all have to follow.
Yeah.
And that's from a lending standpoint, an appraisal standpoint, a home inspector. Even like, you look at like, buying and selling real estate. There's there's all this stuff's in place for real. Those are our guardrails, right? And we got to operate within them.
Yeah.
And it does protect the whole thing.
Yeah, absolutely. Well, let's do one thing. Let's take a break really quick because I'm going to run to the bathroom. All right, so we're back. Okay, so one of the other topics that we started talking about earlier that I want to get back to is let's put it this way. We have a lot of first-time home buyers.
Yep.
And there's a lot of assumptions out there about first-time home buying. Not the least of which is that there's some products out there, lending products out there, that are going to be helpful to first-time home buyers. And there are a lot of products out there.
Yep.
So why don't we talk a little bit about what that looks like for our buyers, and also let's make sure we cover the idea that not everybody is going to qualify.
Yep.
Right. There are certain products that certain people can't qualify because of their situation.
Yep.
So let's talk a little bit about that.
So one big one is like, a lot of times first-time home buyers, they think they qualify, and there's a lot of great products, don't get me wrong. But like, the big one's down payment assistance. It's about, coming up with enough money to help contribute towards a down payment. But a lot of times there's something called AMI, average median income. So if you make too much money, you're kicked out of the program. Like I had a couple, they were making like $700,000 combined income. Never owned a home before. They're ready to buy a house. They're going to spend like $400,000. Very, for their income wise was relatively low. They were livid that they didn't qualify for any down payment assistance programs and anything because of AMI.
Well, let me go back a second. So their income was what?
About, it was like almost $800,000, like $780,000, somewhere around there. A year.
Okay.
Combined.
So they were hoping to
take advantage of first-time home buyer. Yeah.
So in their case, a 20% down payment would have been $80,000.
Correct.
Right?
Yeah.
That's what they would have had to come up with? Or
no, they could have come up with 3%. They just wanted the extra 3% or they wanted only this extra 3%.
Got it.
Which is just, because there's grants, there's all these other things, and they hear about it, and they just wanted and again, to monetize and take advantage of things, great. But a lot of these things are developed for people that can't afford it. You know what I mean? Like there's
let's be clear. Let's be clear. This is a hook.
Yes.
This is a marketing hook.
Yeah.
When people think they're first-time home buyers and we market to them as first-time home buyers, they think it's automatic that we're going to get this, and that's just not fair.
Correct.
Like you shouldn't be. I'm sorry. I'm glad that they make a lot of money, but let's be real. I mean,
they're fortunate.
They're very fortunate, and most of these first-time home buyer programs, they're not meant for that.
Correct.
I mean, that's just.
Yep.
Okay.
I mean, that's no different than trying to get some special programs for your kids' tuition when you're making money like that.
Yeah.
You know what I mean? Like you're just. Unfortunately, there's things that you just get bumped out of because you're more fortunate than others.
Right. Right. Exactly.
But that's an anomaly. Right? That doesn't happen all the time. But but there is some way. It does kick you out. But but a lot of it's just giving you the assistance to come up with down payment. There's some good state programs, but there's even local programs within the city. Some cities have their own specific one.
Right. We've had a few good examples of that.
Yeah.
In the last couple of years, for sure.
And those definitely have AMI restrictions.
So what is there a number with that?
It's
AMI?
all different.
It's all different.
Yeah, it depends on where you're going to live.
Okay. So again, that's a getting started with a lender, talking with yourself, talking with you, having that conversation with one of your team, so that you understand what you can get, what's possible, given your circumstances. And then I think, to be clear about this is not a product. Mm-mm. This is not a product we're talking about when we talk about this. This is not your company or XYZ company offering a product here.
Correct.
We're talking about a service that's offered to all of the companies that all have to go through the same process to approve.
Correct. It's not like one has something more special, but they got to know how to do them. And that's where some places just don't offer them because they don't know how to do them. They need to be packaged up a certain way. There's just certain documentation needs to be. Like when I first got into this industry, we focused on certain loan products. We didn't focus on other loan products.
Okay.
You know what I mean?
Yeah.
So, a lot of it's through just experience and having, qualified people that understand these.
Right.
There's some, especially the local ones, the city ones. There's lenders in our local community that don't know how to do them. They don't know,
Right.
you know what I mean? So, you do have to work with people that understand how to package them and put them up together.
Well, I think that's another key word, which is packaging, because sometimes it's a combination of a few things that will make it possible for someone to purchase a home.
Yep.
It's not just one hook, one marketing thing that does it. We had a deal. Well, it's now a couple months ago that it closed, but it went under contract before Christmas, like long before Christmas, and then it wasn't. You guys weren't involved. Another big bank was involved.
Yep, I remember now.
And I won't name names, but anyway, so they couldn't get it done, and part of the reason was, a big part of the reason was that, number one, they hadn't really communicated up front with their client. Mm-hmm. That client eventually became your client.
Yep.
And they hadn't done their research on that person, nor had they talked with them enough to learn what the true circumstances were.
Yep.
And so they got him on the hook. They got him with the marketing hook that said, hey, we'll give you X amount of dollars.
$10,000 to be a first-time home buyer.
Yeah, and you're going to get it, and then you can go buy a house, but only to find out that he didn't actually qualify for the whole amount.
Correct.
And then not only that, but then they had all kinds of other problems because kind of the same situation we were talking about earlier with regard to getting pre-underwritten, which is you find out that he's on another property.
Yep.
He was involved with another property that he really had no involvement in, but he did.
His parents were doing estate planning, which is very smart.
Yep.
Very good forecasting, and the mom thought she was doing the right things, and she did. She didn't do anything wrong, but technically
she put him on the house that they had in Florida.
Yep.
This summer home.
Yep.
Yep.
And technically he owned. You are not a first time. You technically you own that house.
Right.
It was a type of deed she did.
Right.
And again, nothing wrong with it, but that bank kicked him out of the program.
Right.
That's my assumption, right? That's all speculating.
Well, but it was clear that they had
something happened, and that was a sticking point.
They ran into a big log jam, and they couldn't get the deal done, and that was partially because, again, communication.
Yep.
They didn't ask enough questions.
Yep.
In the beginning.
Yep.
They didn't ask enough questions in the beginning to really know what the circumstances were for that particular buyer. Interestingly, I worked with the buyer's agent. My client was the seller in that case.
Yep.
And I worked with them to bring them over to you because I knew that if anybody was going to be able to solve this problem, it was going to be you. And it was kind of like a last-ditch effort. Like, if we can get this deal done, we'll see if it can get done with Todd's team. And we were able to do that. But again, it came down to doing a deeper dive on the situation.
And he still was able to I was able to give him a down payment assistance. His payment was lower with me, and the amount of money he thought he had to come up was lower with me than the other place.
Oh.
And he was, and I didn't get him $10,000, which is crazy. It was I got him $7,500.
Right.
I remember. Because he was really cool kid. But it was just funny, and he thought, and he didn't want to, and he was so tied up on thinking he was going to lose that when he never had it.
Right. Exactly. And I think that goes back to I wanted to clarify a little bit because we have a in our market there are a lot of we're sitting here right now across the street from a bank, and it's making me think about all of the marketing that we hear from lenders right now and banks. And so much of it is, and especially at this time of year, because we're in the spring market, they're out there advertising on radio and television and the newspaper. They're advertising like mad, these hooks.
Yep.
And I unfortunately, I'm going to call it a hook, and it's pejorative for a reason, because they are, unless you have thoroughly, vetted the situation, that hook, you really don't know that it applies to you.
Yep.
And I think, unfortunately, people make these broad assumptions about lending and about our industry just generally, that because of these hooks, because of marketing.
Yep.
And marketing kind of paints a particular picture. And I just, having come from the marketing world, I can honestly say that was our job. Our job was to cut through the noise and put something, simplify it so that it was clear what we had to offer you, but yet we knew that there was going to that was just a hook. It was just to get you in the door.
Yep.
And yet, ultimately, this is not what we're doing in this business. We obviously want you to come in our doors and talk to us. But what I want to make clear about when I talk with my clients, I call it pulling back the curtain on the industry, because I want them to know that these are the kinds of things that can happen, and the only way that you're going to avoid these obstacles in this process is by open communication and working with people who have, who are really diligently looking out for you on a regular basis.
Yep.
It's not just a sales tool.
Right.
All that said, I just wanted to kind of reemphasize the idea that that beware.
Yeah.
Beware of the marketing hooks that are out there, because they can cause you to think everything's going to be hunky-dory.
Well, you read what you want to read into them, right? Now you just figure out a way to make it work, and it gets exciting, and you think that there's like free money or something, and nothing's really free, right? You know what I mean? And then sometimes the red tape, like I know one guy I was working with a bigger bank, he was able to get 0.25% off the interest rate, which was great. Yeah. But they wanted $50,000. You had to have a minimum of $50,000 in there, between all your stuff, right?
Right.
He didn't have that. You know what I mean? And
Okay.
it was just, would have been great for that. Yeah. But not everyone qualifies for something like that, and that was the hook.
Right.
He thought he was going to get this lower, and when it all came down to it, he didn't qualify. And
Right.
he, ended up working with us instead.
Okay.
But there's tons of stories like that.
Yeah, yeah.
But it goes back to just preparing, right? Working with people that know what they're doing, and that care and that are accessible. That's the thing is you don't work 9 to 5.
No.
You work on weekends. You know what I mean?
Yes.
It's you work till it's done. You know what I mean? And there's times you set aside. Don't get me wrong.
Yeah.
But you also have people around you that you let everyone know, and
Yes.
you let them know, hey, I'm doing this day. I may not be as accessible as normal, but I'm here
Right.
for you. Right? You know what I
Right.
mean?
Exactly.
You explain it, or you have people on your team that assist you. There's times where I can't handle something. Hey, so and so will be available right now. I'm going to be out of town this week.
Yeah.
For this weekend, this is what I'm doing. Just be transparent. There's no.
Well, I think to your point, I think it's the idea here is that we bring, and both of us have this. We bring a team to the table.
Yep.
We've got other people. We don't all. Scott doesn't have to do everything.
Correct.
Todd doesn't have to do everything. I think that's something that a lot of. So I'm gonna say something that might be a little harsh. But there are the weekend warriors in our business,
Yep.
in my business, on the real estate, on the realtor side. There's those people who have the full-time job during the week, and they're going out there showing houses to their friends and family on the weekends, and they're not really doing it full-time. So they're missing a lot of what's going on in the industry, number one. Number two, they don't necessarily have the backup that they should have. I believe they should have to be doing right by their clients.
Yep.
Because ultimately, I want my clients to be well served, and I know that one person isn't going to be able to do it.
It's time, right? There's only so much time. If you're showing houses, is it fair to that person you're showing houses to be taking every phone call that's coming in while you're giving them the time?
Yeah,
right?
exactly.
It's rude. I mean,
Right,
in a way, right?
exactly.
I mean, it's just me personally,
Yeah,
right?
exactly. I agree.
If I'm giving someone attention and I'm we're going through an application, I can't sit there and take every single call while I'm doing that, because now it's taking away from
Right.
them,
Right.
and I don't want to miss something that's super, super important
Right.
through that,
Right, exactly.
So I mean, it's just work, but it's not having a massive team. It's having a team that works on these transactions, right? So you're not just another number.
Yeah, and I think it comes down to just making sure that the clients, in our case, they understand these are the people on
Yes.
the team. these are their responsibilities, their roles, and these are the people that you're going to hear from throughout that process. And I think that's something that we can all do a better job of communicating with our clients. There's no question that everybody can always improve, but that's something that I pride myself on in our team, is that we have those resources for our clients, so that we can help take the stress off.
Yep.
Right. When I see people who are working with very stressed out agents, I feel for them, because I can tell the agent's kind of putting that stress into the situation, and it's unnecessary.
Yep.
Right. And then all that emergency stuff that we talked about, everything becomes an emergency, and everything becomes about, I'm busy and I'm so busy I can't keep up with all this, and then before you know it, that's everybody involved in the deal. Everybody involved in the transaction now is on edge, because people are being,
everything's a fire drill.
Everything's exactly.
And it's everything's, and if everything's urgent, nothing's important. You know what I mean? Because there's a difference.
Wait a minute, let's go back. Let's say that again. Say it again.
If everything's urgent, nothing's important.
There you go. I think that's so important.
Yeah.
Right. That is absolutely golden.
Yeah.
Right there, because it is exactly what people think urgency. It's like this notion of being able to multitask. Right. Everybody thinks they can multitask. You're not multitasking. You're just doing everything poorly.
Yes.
Right?
Yes. You're shelving something in between.
Exactly. So you have to know that the same is true with urgency.
Yep.
Like that. That if everything is urgent, then nothing is getting done the way it should be.
Right.
And
now there's
and
points like we have that one right now, like with a point of sale, and the listing agent, unfortunately, when you have to get repairs done and stuff like that, for the seller, that should be urgent, right? Because this person's trying to buy your house. This person, and we run into that a lot, where you wait to the last minute, and then all of a sudden the stuff gets done, and now everything has to be done right away, and it's
or it has to be fixed because they didn't do it right the first time.
Right, and that happened. I mean, there's certain levels. To me, again, if I'm buying, right, or someone's selling, those repairs are critical. That's critical to the transaction, right?
Yeah, it has a value in the transaction. Is the point. It has a real value.
Yeah.
Yep.
But that's all this preparation and expectations and all that stuff.
Right. But going back to that being urgent, that is urgent.
Yep. To me, that's urgent. Yeah.
Right. But not everything is urgent.
Correct.
Is the point, right?
Yep.
Because if everything is, then the urgency suddenly on that topic becomes less urgent.
And it's funny because
that's not acceptable. It has to be urgent.
Yeah.
Right?
And it's funny because there are some agents that we work with, everything's urgent. You know what I mean? From you saying hello, from them accepting contract, it's urgent throughout the whole thing. And it's just there's urgency, but there's also are you just making things up? My favorite one is, I remember one month, I had 3 people call me, was on the listing side, well, my sellers, they're all going out of town, and they don't have access to any internet, and they won't have any accessibility. And it was literally 3 of them. So I'm all right, what video did they just watch? So how do we create urgency, right? And it was literally this, it was canned, and it was fun, it was comical. You know what I mean?
I see what you're
what's
saying.
The chances of 3 people all going out of the country in a place with no internet, no communication? Right. I'm come on. And it literally happened all within the same month. It was back to back to back. It's all right, well, one of them's probably true, but the other 2 are probably lying.
Yeah. Oh, wait a minute. Sorry about that. I just covered up my mic. Wait a minute. We have to know that you're not allowed to lie.
No?
No, you're not allowed. That's not acceptable. I have found that, unfortunately, that is something that you do encounter in this business.
Yep.
And or the truth is sort of skewed a little bit in favor of that person or whatever. One of the things that my mother used to say, how did she put this? But basically, she'd sent me out into the world when I was a kid, saying, "No, don't lie to anybody because I know everybody that you're talking to."
Right.
So it was very clear, you're going to get caught in your
right.
lie. And I say that because it almost never fails when someone has tried to, skirt the truth, lie a little, white lie, or whatever you want to call it, or just a bold-faced lie in our industry, it almost always comes back to haunt them.
It backfires.
It backfires,
You know,
right?
And a lot of it's withholding information. Like I think a lot of it's timing of stuff. Like when there's a problem, you bring up the problem right away. Don't wait 3 or 4 days. Because you lose 3 or 4 days in a week, that you basically lose a week almost.
Yeah. Now that's not necessarily lying outright, but that's an obfuscation that can be a problem for a deal. And I think that's something you could call it a little white lie, or just withholding the truth for a while. But you're absolutely right. It just does nothing to help. It's not. You think it's helping. You think it's helping your client. Again, it's this sort of antagonistic us versus them thing that we get caught up in, and it does nothing to help the process. And again, if you've got a bird in hand is worth two in a bush. Take it. Do the right thing. Do the right thing. Communicate clearly what you can communicate, so that you can move the deal along, and everybody is aware of things that they should be aware of.
Well, it's like right now you could tell this is something that must be recent because it's on top of my mind about the tax lien, right? So, like that was a great example of telling everyone right now, hey, this came up, we're waiting to get a payment plan, put this together, we're just waiting. There's nothing wrong, they still qualify, there's no problem, but we're just waiting. I can't, my hands are tied right now.
Right.
Until we get this.
Right.
And, I appreciate your understanding of all this, but this is, where it's at, and I'd rather have us know now than down the road. Because if I'm selling my house, right, if I find out the day of closing or the day before closing, I'd rather let everyone know, hey, it could still happen on time. Because I'm like 2 weeks out on this, but it could still happen on time, but it could also not.
Right.
You know what I mean?
Yeah, and you're saying that. You're making it clear that this is where we're at.
Yep.
This is where it could go, or this is where it could go.
Correct.
And I think that's super important to the process. That said, it's also incumbent upon agents to, bring the level of urgency down on all of this. And I think too often, and again, I'm kind of ragging on the industry a little bit, but too often there's everything is at this heightened, importance, and consequently, you're kind of needlessly throwing gasoline on the fire here.
You create unneeded pressure. Like life's hard enough as it is, right? You know what I mean?
Yep.
Life's bumpy, right? Yep. And there's always things, and it's like you sit there and you have all these you add extra pressure. It doesn't need to be there. It's almost pointless.
It doesn't need to be there.
No, and
it
now
doesn't need to be there. It is pointless.
And this transaction now becomes high stress. Everyone's rattled, and it just doesn't go smooth. Right. Which it could have been avoided all in the beginning, but it's like I'd rather let someone know this out of the gate and not wait to the very last minute. Can it all happen? Yes. But it's like I'd rather say, hey, or we need an extra day, because that's why it's like we need an extension or something. If everyone understands the why, it's not that big of a deal. But if it's last minute and you're supposed to close in 2 days, and all of a sudden, hey, this came up, well, why didn't I know? Because why don't I know this right now? There's sometimes, don't get me wrong, there are things that come up last minute, but again.
They do, yeah, right.
But it's like, if you can, as this stuff hits you, you got to throw it, you have to put it out there.
Yeah, I agree. And if only because we're dealing with a lot of issues. We're not just dealing with this issue that's come up.
Correct.
There's a lot of stuff that's going on.
Yeah.
In order to keep the whole thing moving forward, we have to make sure every step of the way, and every parallel step of the way, we're making sure that things are being communicated, and we're moving them along in the process. Because it's not just lending necessarily. It could be something at title. It could be something with the house. It could be something with the buyer. It could be something with the seller.
Right.
There's always something going on in everybody's lives and every aspect of the deal that has to be in alignment. Pardon me a second.
Yeah.
We want these things to be in alignment.
Yeah.
You'll be able to edit that. We'll be able to. That bug was right in my face. So I think that keeping things in alignment throughout the transaction, throughout the deal process, it's incumbent upon agents, because we're kind of the go-between for all of this, to kind of lower the anxiety and tone a little bit, so that we are the calm in the storm, as it were. Because it can be a storm, but it doesn't have to be a storm, and we should always be the calm.
Yeah.
And I don't see that a lot.
No. And you have all the FaceTime with them. Like I could tell someone something and they understand it, But when you sit down and it's like, they hear it from me and then you reinforce, like, yeah, this is just normal. This stuff kind of happens once in a while. It just sucks that it happened to you. You know what I mean? Like, does it happen all the time? No, but it happened to you and we'll get through it. Not a big deal.
Right.
So all of a sudden, everyone's tension is just down. And, listen, when it gets crazy, we'll let you know. You'll know when it gets intense, right?
Right.
But some of this stuff is just the normal hurdles. And
yeah, and I think one of the things that you were talking about, some of your latest experiences, and one that I'm not consistently, but more and more having with clients is just the reality of, like, here's the process, and when we present the process and we've made it clear, we have a timeline and everything. So once we're under contract, we send them a timeline for all the things that we've agreed to that are in the contract that we're going to meet those deadlines, right? We're going to meet those deadlines. We have to reinforce that. We have to consistently reinforce that on our team. We're making sure that the client understands these are the deadlines, and then reinforcing it time and time again so that everybody is on the same page, in alignment with the contract that we've written and the timing of this, because otherwise it can turn into a mess, right? So we're seeing that. I'm seeing that it's imperative that we on our team make sure that we're doing that, because that helps keep the tone, like, everybody chill and not too freaked out, not too, getting their voices raised or concerns about what's going on. It's happening, and this is the process. And we'll get you through that process. But just reinforcing the roadmap on a regular basis seems to be more important now than ever. If only because there's agents that are doing fewer deals and they're making everything like the biggest paycheck in the world, and they're all worried about the deal closing. And
it feels that way at times. You know what I mean? Like when you put when the client's not being put forward, right? And you could sense it. When you do this long enough, you could sense it in the tonality. With things like, when, especially when a listing agent's like spitting flames, right? They're upset about something. We just got the appraisal back on Wednesday. You know what I mean? Like, it took you that much longer for us to get in the property. We lose that time. And, the underwriter, even though the stuff's underwritten, they still have to they're still going to look at it, make sure no one's pulled anything, because they still have a responsibility to do. They don't just like, we get an appraisal, all right, we're done. They review the appraisal. They sit there and they can go back on the AMC and say, hey, we want these additional comps, or, they find, things do come up because people, unfortunately, they don't take our advice. They spend money.
Well, that, and things are changing, like like the market. The market's moving, and things change.
And just once we get when we get a document, the underwriter, they have to, we wait for that clear to close, right? And then it goes to a closing department. They're the ones that draw documents. They double check some things as well to make sure the underwriter didn't screw up. And then they work with the title company to balance the closing disclosure, which is meaning, making sure everything's in line to figure out what that exact dollar amount that you have to bring to the table with, right?
That's right.
And it all takes time.
And those are based on, those dollar amounts are daily.
Yes.
Like, because every day it's going to change because of taxes.
Taxes, interest, right?
Interest,
prepaid interest. Every day you don't make a mortgage payment, because of that gap, that costs money.
Yeah, we don't round those numbers.
No. And everything's exact, right?
It's very precise. I mean, we're, like, for example, names, making sure names are right. Making
middle
sure
initials.
Middle initials are correct. And
that stuff that pops up, you know what I mean? Like, even, especially when someone's been married and they change their name and something may not be changed on a document, and why is this one not matching this?
Right.
Everything has to be in sync.
Right, exactly. Yep, exactly. So that makes me think of something else, though, that when we started this conversation, I said we would talk about things outside of real estate, but that are affecting real estate. Now, before we get into AI, I just want to say that coffee affects me.
All right.
We're sitting here at Goodkind Coffee, and I love having an afternoon coffee, but I think I had a decaf, but I'm starting to feel like maybe I didn't.
I don't think so. I don't think do they make decaf espresso?
They do.
Espresso?
They do.
All right.
I'm wondering, though, did I get a decaf? Because, man, I'm definitely geared up. No, anyway, so what I did want to talk about though was AI. I have been using AI now in various ways, going on 4 years. We've been doing it. We've been using AI for 4 years in my business. We've used it primarily up until this last year on the marketing side. A lot of AI on the marketing side. And now it seems, well, this last year it's become ubiquitous. We're seeing it everywhere. And I don't know to what extent real estate agents are using AI. I'm almost certain that they're not using it to the extent that we are on my team, because we've been using it for so long and worked with a couple of organizations that have been using AI for a number of years now. I've been to events where real estate agents weren't even aware of some of the basics of AI, and it was kind of shocking, honestly, that they didn't know. Like I was note taking with my AI, and at an event about, I don't know, maybe 6-8 months ago, and I was getting a download from AI on how this was going to affect my business and what I could use, from this event that I was at that could be used in my business right away, because AI already understood what my business was. I had already taught AI.
It understood. It knows
what
you.
I was doing with it and what I needed in my business, and so what my business was all about. So it knew where I could immediately, use some of this information that I was finding at this event, and consequently was able to, like leapfrog in terms of, my work product. I was able to, put my CEO hat on and start something that would have taken me a month to figure out. But I immediately had a memo an email that I sent to my team, and that we started implementing these things. So all that said, AI is definitely here. I don't know where it's going. I mean, I have some predictions about that, and we might want to talk a little bit about that. But I thought we should talk about AI in terms of what we are seeing in our businesses, how it's impacting our clients, and our, and the industry just generally. So with that,
So it's moving extremely fast. It really reminds me of, like, I remember like in the late 90s, early 2000, when like internet was coming out. Email, internet, right? I remember fax machine. See the fax machine where it's all like heat sink paper.
Oh yeah.
You know what I mean? But like it was
disappearing ink.
Yeah. But like it reminds me, the feel of it is a lot like that, which it changed everything. You know what I mean? The internet, it changed everything.
Oh yeah.
I mean, even look how our phones work and everything. You know what I mean? Like we have like basically, look what a computer did back in 2000, what our phone does. Like our phone does more than what that computer did, right?
Yes, it does.
So this is where this is going, and it's moving fast, like extremely fast. When I first started using a lot of AI stuff, it was more for, like, it was almost like a Google on steroids, right? You know what I mean? It was more of like a search engine.
Yeah.
And then you start learning the more it can do. And even now more tasks. I mean, there's a lot of stuff that I have to do for like financial modeling and things like that, for like growth and all that. Like it's insane. And what it would take me a long time, now it takes my emotions out of decision making. It literally, I could plug in things. It gives me forecasts, branches and all this, like literally everything. And that's just me. And I'm not like a computer programmer. I'm not you know what I mean? And that's where it's scary now, because it could take someone that has good ideas and things and you could just talk to it. You don't even have to type.
Right.
And it'll build what you need it to build out.
Right.
Now in our industry, a lot of stuff's like what makes it shifts now. We're part of some pretty exciting stuff where it's exciting for me, but on an entry level position, it's scary, right? But like for processing, in my view, I think in the next 24 months, it could eliminate a lot of processors' jobs.
Oh wow.
Because and it's tough with people. Like people get sick, people have obligations, people have things. AI doesn't.
Right.
You know what I mean? Like AI doesn't. It goes 24/7. And I mean, literally from the beginning of an application, there's things where it could sit there and take all the information in the call, literally fill out a loan application for a loan officer. Instead of typing, it'll literally start plugging information in there.
Right.
And then when it goes to which that'll never change. That role is secure. But for a processor, a lot of things are all ordered. There's verifications and all this, where that's all going to be done through AI. It's all going to be automated.
If only because it's also computerized.
Correct.
I mean, the data is computerized. And
Yep.
so it's basically moving the data within in our case, the CRM. In your case, it's something else. But,
Yep.
But the idea being is that you don't need that assistant. Basically, you call that person a processor, but it's an assistant who's
Correct.
moving that material around within the system.
Ordering it complete. And the thing is, really underwriters would rather get that digital, instead of getting W-2s and pay stubs,
Yeah.
they would rather have the electronic one pulled right down from ADP.
Yeah, because it can be plugged right into their
Correct.
into their math.
Yep, and it'll pull down that document. The AI will read the document, make sure that even transcripts, it'll read those documents and make sure they're accurate and calculate the income. So it takes a lot of the tasks that a person would
So
do.
it's really the repetitive stuff that
Yep.
it feels like we're going to be able to streamline.
But it's extremely time consuming, and it
And
takes
it's
time,
time-consuming,
and
right.
and it's uploading and doing
Right,
all this. Where like that, orders
Oh, it's
are out,
crazy.
comes in, and then if you don't have it, it'll follow up. I mean, it's moving and it's getting so good.
Right.
That's the part. It's fun and it's cool, but it's also a little scary, right? The scary part is, and this is more of a broad thing. It's like, who does it really affect? For me, unfortunately, I'm not worried. You know what I mean?
Yeah. Right. It's going to have an impact though on working people.
Working people that are trying to start off in anything, because everyone I start off in a bad position, crappy position, right? Most people
Right.
start off and they kind of work their way up.
Right.
The point of entry, the bars, I think, is going to be raised so
I
much
see what you mean.
higher.
Yeah, right.
On things. That's the scary part. So it's like, my kids in school, depending on the degree they're going for and things like that. Like that entry level position is not going to be an entry level position. It's something like more a mid level position.
Well, we're already seeing that, and that's not necessarily only because of AI.
Correct.
Also, right? I mean, they're just the entry level positions have been depleted dramatically in the last couple of years.
And they're going to be gone.
Yeah.
I mean,
Well, let's not say it's going to be gone. That sounds a little harsh, but
I think any data entry stuff, all that,
Okay,
that's
yeah,
completely
I
gone.
see what you mean.
You know what I
Yeah,
mean?
right,
But
right.
in our industry, that's how you learn that kind of stuff. No one wakes up in the morning and wants to be a mortgage person. We don't go to school for it. We kind of fall into it, right?
Yeah.
We know someone, you hear someone, you want oh, that sounds really interesting, and then you kind of fall into that. You have your life experiences, and then
yeah, it's not taught at a school.
No.
Right? And you get into it, and then you learn it.
Yes.
You learn it doing it. You
Yes.
learn by doing.
Yep.
So you learn by doing some of the repetitive tasks,
Yep.
doing that a lot, and then someone says, gosh, you're really good at that. I think you'd also be good at this.
Yes.
And then you get...
You excel, right?
Yeah, then you get to excel, and you get to take that next
Yep.
chair in the
and that's
role
where
in
it's
the
going to get
business.
and that's where it's going to get hard, for that. But for efficiency though, those timelines, those 30 days are going to be very easy to be met. You know what I mean? Because underwriting is going to be the exact same thing. It goes through it'll be underwritten all through the AI. We already use some AI for more of your conventional loan and they're your very standard loan. Where they're refining it right now is the more complex loans. And that's the part that where the interpretation of income and all that will end up being. I think a lot of it will end up being standardized.
Okay.
You know what I mean? So it is less vague, which really it should be. You know what I mean? There should be one standard. It all
we
gets
talked about it.
calculated.
We said it needs to be rational. It can't
Yep.
be emotional.
Yep.
Right?
And for the back end of the business, making sure the purchase contract's completed correctly and all that kind of stuff, that there's no gap. It could notify everybody, it could send emails, it could send texts, it has voice recording calls that literally I think they sound like real people. I've been on tests with it.
Yeah, we've been using it for a number of years.
Yeah, and it's getting so good
Yeah.
that I look for cues. There's a new one now where it literally, when they're talking, you hear typing in the background
Yeah.
to cover the
Yeah,
pause.
Yeah.
And it tricks
Yeah.
your mind, and it's I literally, it threw me off, and it's that good now.
Yeah. Well, actually in our case we are we're letting the consumer know that it's an AI assistant.
Yep.
Because people are getting savvy.
Yep.
All we have to do is go on, Instagram or Facebook and see the latest, creation
Yes.
of AI, and you're like, oh my God, this is so real, but you still know it's not.
Correct.
My son and I were laughing about one. It was like, it looks so real, but there was just something about it that was, oh yeah, it's like too perfect.
Yes. Yep.
And that's all you have to know. It's all you have to know. It's too perfect. That said, going back to what you're saying, though, that's an impact on your business that you're talking about. What I'm also hearing, though, is that when I see this freeing people up. So maybe not necessarily everybody loses their job, or a certain level of people lose their job. It could mean that certain roles get transitioned into different kinds of roles within the business. I know, at least in my case, it's going to free us up to provide another level of service to our clients.
But it's not to give you more time back. That's the part misconception a lot of people have. Like, a cell phone isn't to make your life easier, it's to make you more accessible. Right? You know what I mean? Like, you didn't have to go to a payphone anymore. You don't need a bunch of quarters in your car.
Right.
But it made you more accessible, right?
And more efficient, obviously, in the process.
But you're doing more. You know what I mean? Like,
you're able to do more in your business, whatever that more is. But so it might be that you are, thinking more out of the box.
Yeah.
Thinking about where you can go, where you can take your business, or in my case, where I'm going to take my business and my clients.
Yep.
Because I have that. I have that ability to do that. So I look at it more like a leverage kind of equation for me. It's leverage, as in it's making it possible for me to think differently about the business.
Yes. And it creates efficiencies and things like there's a lot of positive with it, but it's not, because some people think that it's going to, I'm just going to be able to do less. No. It's going to enhance what you're doing. It is not to, because there was a time, we didn't even think about it. If you really go way back, like when my parents were like in like the normal working era, like when there was no cell phones. When they went home, like now, like you were talking about processors, people carrying like Teams is on their account. They have access to their emails, their phone, like everything is connected, and they go home and they're still thinking about it.
Right.
Where back there was a time when you went home, your phone didn't ring.
It was the end of the day.
It was the end of the day.
The end of the day. The whistle blew and you went home.
Yep, and that was it.
You had your home life. Now we don't necessarily do that. We have to carve it out.
Yep.
We have to, going back to communication, we have to tell our clients, this is when I'm carving this out for my family, whatever. But that seems to be more and more the norm.
Yep.
Right? We're just accepting the fact that work is life. Life is work.
Yep.
And we're not really, and I say that in the most positive way. Sometimes that can be perceived as negative, but when you're doing something that is, in my case, doing what I feel we do for our clients, I get a lot out of that. So,
you like what you do. Like, I know, I like what I do.
Yeah.
So like when it's, when I'm taking a call at 8:30 at night on a Friday, or 7:30 in the morning on a Saturday, which is crazy.
Yep.
You know what I mean? Like,
it's for a good cause.
But it's for a good cause, but it doesn't bother me. Like, I don't think of it as like, oh, I'm waking up, I'm going to work today, I'm doing this, I'm doing that. You know what I mean? Like, I enjoy what I do. I see you see what happens with it. Like, it's cool to see. Like, I love seeing when someone gets a house, or when you could do a loan that they didn't think they can do. You know what I mean?
Exactly.
Like that one guy that we were talking about who was turned down. He did an awesome review, but he talked about how he gave up faith in everything. He just thought it was done. He didn't think it was ever going to happen. You know what I mean?
Yep.
And because you get burned and you get you don't think that. It's like, how can someone else do this, right? And like those wins are exciting,
right?
Or you know what I mean?
So AI's job is to help us do more.
It's to make you do more, but also make you better. You could become an expert in, like right now, you could become an expert builder by watching YouTube videos, right? You can learn how to do.
You can learn
a lot. Yes. I learned a lot from it. You know what I mean? Like you could tear an engine.
There's no question.
You know what I mean? Now you got to work it. You got to figure it all out. This gives you that information a lot faster.
Yeah, I have to say, it was probably a year ago. More than that now. The first person that started talking about it in terms of being sort of like a search engine was describing what he was doing and with it, and it was so amazing what he was doing, and it was, and I won't go into all the detail, but what he was using it for told me that it's only a matter of time before this turns into something like HAL in 2001. And I thought, and I mean, if anybody out there isn't aware of 2001 Space Odyssey, the movie and the story by Arthur C. Clarke, it's where this robotic entity in the movie takes over this particular spaceship. And I won't go into all the details, but at the time I was thinking about, oh gosh, this could be really, really bad, and it's going to be, there's something cringy about it. And this was a couple of years ago now, and now I'm starting to recognize that it's a tool.
Yep.
And I have a lot of tools. Like
Yep.
I have a saw, and I have we have tools in our kitchen to cook things with. It's really a tool. The telephone, this we call it telephone, the cell phone, these computers that we're carrying around in our hands, they're tools.
Yep.
And I think the most creative people now are the ones who are figuring out the ways to make these tools, and the AI being the one that we're talking about right now, make them do something that we're well aware of its negative stuff. We're well aware of its impact on the climate, for example, with all of the things that it takes to
energy it uses,
energy
right?
that it's using. We're well aware of that, but the fact is that it's a tool, and we're going to figure out what the smart people, maybe some of us, we're figuring it out. We're figuring out how to make this work. Eventually, it will evolve.
Yep.
Is the way I look at it. I mean, this thing's going to evolve. It's just a matter, and we don't know where that's going to go. But one thing's for sure, it's a tool that we're going to make the most of, and we're going to do something the most creative people are the ones who are going to really, push the limits and do something positive with this.
Well, I mean, I read something where it was talking about X-rays, reading X-rays.
Yeah.
And, where, a radiologist reads an X-ray, it's called, and I don't know the number specifically, but they were like 30% accurate or something like that.
Yeah.
And
There's always a little bit of inaccuracy in every reading.
Yep. And then, but when they're using it with AI, it almost cut their inaccuracy in half. You know what I mean? What does that mean? You know what I mean?
Right.
That's huge when you think about
Exactly.
it. Taking results instead of someone interpreting them. Which, again, you have to know things, right? And it's always how you better, but you don't know what that doctor, what they've been able to, how far their researchers went, interpreting readings or historical readings. I mean, it's a guess. But, now they could take, they input those readings into things, your whole history, and it could diagnose things a lot faster and be a lot more effective and let you know, hey, this might be a problem.
Right.
You know what I mean? I think there's a lot of that type of stuff, which is really, it's exciting because, it's going to give us longevity and stuff like that, but it just shows that people are people, right? We only know so much, and
we can only bring so much to the top of mind at any given moment, whereas apparently AI is able to do it instantaneously, right? Or almost instantaneously. That said, going back to what I was alluding to, I didn't say it. I do think though that the human involvement in this is so critical.
Oh.
So when we're not just teaching, I was telling my friends about this a few years ago. Right now we're teaching AI everything we know about the world.
Yeah.
It only knows what we teach it. It doesn't figure this out on its own.
Correct.
It doesn't go out and explore the universe. It doesn't go out and dive into the ocean.
Right.
It doesn't scratch the surface of the earth. We do.
Yep.
We are doing all of that. We're the ones who ultimately then, in my opinion, I'm extrapolating from this, that not only are we the ones that are inputting all of that, but we're the ones who are responsible for and ultimately going to have the ultimate control over where it goes, because it requires our involvement.
Yep.
in order for it to exist and for it to grow and for it to learn and ultimately create what we wanted to create. I look at what they're doing right now with it as being, it's all very nascent and all very pedestrian, almost, like you're thinking of that, you're thinking of making a picture of something with it,
Right.
Or making even a movie out, having it make a movie. I
Right.
feel like that is so small. Like that, we're
Yes.
thinking so small with this.
It could be things that can do great things, right?
Yeah.
Not just like I was
Yeah.
doing some continuing education the other day, and before, again, it was position. Before, there was a guy that would sit there and recite everything and do everything. That was his job.
Yeah.
You know what I mean? It's dry. It's not fun.
Right.
I'm sure he doesn't enjoy doing it. Doing 7 hours of talking.
Right.
You know what I mean? They split up with some other people so it doesn't get as dry. But it was all AI driven. It was all AI people saying it now, which is crazy because you could tell like they were
Right.
And
right.
for a minute, I'm
I
like,
see what you're saying.
they're
Right.
kind of like they're almost
Right.
they look like people. They're a little too cartoon like.
Right.
You know what I mean? Like there was this little
Yeah.
thing
Yeah.
about it, and I'm like, damn, this is AI now, right?
Oh
You know what
my
I mean?
God, I love it.
But like that's not what it's gonna. That's not the like to me. It's like the big things, right? Like again, reading results. That's life changing.
Yeah,
stuff.
imagine when it's
And that's
helping
not-
us do research on
Curing things.
on curing things, on healthcare and things like anything related to that, or analyzing what we do scratch out of the earth, what we do
Yeah.
find in the universe,
Yeah.
and helping us analyze it. But I think the key word there is help.
Yeah.
It's helping us and making us more efficient at what we're
Right.
doing.
It's not do.
Right.
Right. It's not
exactly.
doing it for
Right.
you.
Right. Wow. Well, this was great.